So yeah, let's just start from top bottom. So y'all saw my alert last night, and if you didn't, hopefully you did this morning. But this was the whole premise of why I was bearish. Just the failure to reverse from inside of this 4 hour fair value gap, but also more importantly is just kind of how the structure is forming. So you guys can see we have expansion, right? Expansion, and then what comes after expansion? It's either consolidation or reversal, right? It can never be consolidation reversal. It can only be consolidation expansion. So after we expanded, we put in this sort of reversal candle here. And then obviously we have this daily fair value gap, which you can be anticipating since we're in a buy market to act as support. There's no reason to fade this until proven otherwise. And so why am I trusting now that this high is potentially a short-term protected high? Well, you look at ES, there's just SMT with ES. So when you have this cracking correlation and then the continuous failure to revert out of here, then we look to the opposing side of the range. So our nearest draw is just this candle's low. But if we look at the 4 hour really quickly, it just stacked equal lows. So this low would be our potential interest. And when this does get hit, then you would want to be most likely out of your shorts, or at least obviously a majority of your position. Day trade, swing trade, etc. So why am I trusting now that we are failing to reverse? Well, if we go into replay mode, you guys can see that this is a potential, again, another reversal candle. So instead of this one setting the tone of continuous prices lower, this is just like kind of like a warning shot right here. This is how I was thinking about this candle. We take the high, close back in the range, bearish candle. We're not just assuming that this is just automatically protected because of the SMT. We have to wait for the failure to get through this area. So what does Tuesday or what does Thursday do? It takes Wednesday's low, taps inside of the daily fair value gap, and then closes back inside the range. So now this could be anticipated as a reversal candle to look towards this area. But the only problem is that price is respecting the 50% of this wick, which is not necessarily what you want to be seeing. So again, you kind of just have to continuously wait. What does the next day do? This is how I know now that we are most likely going to continue to the opposing side of the range. What do? Well, we fail to go higher. And what does Friday do? Again, respects the 50% of this upper wick. And that's what you want to be seeing. We also then close below the daily fair value gap and pretty much almost close below the previous daily low. So with all of that being noted before we go into the lower time frame, which is the 4 hour, what do you notice in the 4 hour? Same thing that I was alerting. Well, now we have bearish PD rays being respected. We have up close candles being closed below here. And every single swing high that's being created gets rejected. More up close candles are getting closed below. And every time that occurs, they're being used as resistance. So now we have highs that are being rejected, 4 hour fair value gaps being respected, so bearish PD rays being created and respected. And then we have continuously bearish order flow. So there's no reason to look for any sort of longs. Do you guys see how every time we take a high, we just go lower? Every time we close below these up close candles, we have continuous prices lower. The failure to reverse off lows and the failure to get above or through these bearish PD rays. So I'm just following order flow. And then notice again, 4 hour fair value gap closed below here. So not what you want to be seeing, obviously, when you're looking for buys. And continuously failing to reverse from under higher time frame key swing points, right? So again, same thesis. This was yesterday. Here is the opening price, the weekly open. What does price do? Runs out a short-term high. There is SMT here with YM. That was ES down there, so you guys can see ES does take this high, but YM fails to do so. So potential again, protected swing high. What do we leave? A 4 hour fair value gap. What happens? Another up close candle gets closed below. This is just how I am following order flow. That's why I'm being repetitive. That's why I continue to show you guys. This is what I was alerting last night. This is what the candle looked like on my chart on the 4 hour. This is why I have 4-hour negative OB question mark. I'm waiting for the 2 a.m. candle to close to validate this new series of up close candles to be another continuation signature to where? Well, the lowest hanging fruit is obviously previous daily low, but this is our main draw on liquidity. And then the daily fair value gap, and then EQ of the range on the daily. So what does price do? Closes below. Now I'm interested in potential shorts, especially when I get that continuation signature close to 9:30 during the New York session. So I can already assume that why is this high going to be protected? Well, what time is it created at? The new day open, 6 p.m. How do we want a bearish candle to form? You want it to open high. What are we open highing into? A 4-hour fair value gap. What do we do now to validate this high as a protected swing, at least to the short-term low? We just close below, validating this as an up close candle. That's it. That's the only reason that this high is protected. What do? We drop down to a lower time frame. We let price play out, and we get closer to the New York session. And what does price do in the lower time frame? Well, here's that new day open. Here's the new day opening gap. Price is respecting that very nicely. And then more importantly, where my eyes really were was just this hourly fair value gap. Notice, what do we have? A manipulation of the high, and then a closure through the up close candle. At what? This is that 18 o'clock, so new day open. And then notice what time the high forms. London. What are we doing? Rebalancing an hourly fair value gap right above the weekly open. Notice the stacked lows being accumulated. You guys understand this? Stacked lows, stacked lows, stacked lows, stacked lows, stacked lows. What are we looking for in a continuation signature? Do we have a change in the state of delivery here? Nope. And it would be too far, or it'd be already too close to this potential draw, and then a 2-hour trade. So what do? We just drop down to lower time frame. When you already have the framework, it's easy to continuously drop lower and then trust that you're going to be on side. So this you could already assume is a protected high. Do I trade all the way before 9:30? No. I'll take a trade sometimes pre 9:30 like I did today. So you could, this is a perfectly valid short right here. Your stop loss would have to be somewhere up here. So this is what I would have done if I would have entered here. I would have just entered somewhere here. Stop loss would have been up here. And then the take profit would be, of course, 2R. But I don't trade here. So what do? I wait for that continuation signature. This is exactly what I'm looking for. Price rebalances. Again, another 30-minute fair value gap. Just fractalize it now, right? Up close candle getting closed below. What do we have? New series of up close candles that rebalance an inefficiency, creates a swing high. What do? Close below it. What do we have? Midnight price. Now, refine it even more if you want, or you can just stay on the 30-minute. I just went to the 15-minute because I was using this lower time frame breaker here. We have a high, a low, a higher high, and a lower low. This is just a lower time frame breaker, not the highest of quality, but I was just using it in tandem with this 15-minute fair value gap and understanding that when we do pop above that midnight opening price with all these stacked lows, this is a short-term premium for the market. So I'm in just off of the high, literally went short at 52.75. You guys saw my alert today. Stop loss was up here. And this was a little bit of a riskier stop loss. The ideal stop loss should be up here. But I wanted to try and just get a little bit better RR. And ideally, the high of the breaker should be enough of a stop loss, especially when you have that 15-minute fair value gap there and that order block on the 30-minute as well. So all of these things is what I was basing my entry off of. Sometimes price can just come up, tap into it, and leave. That's why I have my order at the very high of this candle. Didn't want to miss out on the trade, not trying to be perfect. And then you guys can see the rest was history. And this is why I kind of understood that the markets were not correlated. ES, I saw YM was literally doing, you guys, this is literally what YM is doing right now. It's completely doing its own thing, reversing off of previous daily low. ES was, this was where ES was at the time. I was not really worried about NASDAQ getting that strength switch just because it was so close to its previous daily low. And I understood after all of that higher time frame framework that this draw down here at 587.50 should be the draw on liquidity. And then if we play price, SMT at the lows. Got to be just a little bit careful here. That's why when you have this sort of trash price action, you kind of want to stick to the higher time frame. And notice, how do we anticipate true breakouts, right? We use old lows, old important lows, as resistance inside of PD arrays. So this was a great continuation setup here if you failed to get long earlier. And I told you guys that you should be stopped at break even after 2R was smacked, protect your risk, and then this was the draw, and then this ended up getting hit not too long afterwards. But that was the entire logic of this trade. Ended up running like 80 points or something like that, but I just took all my profit at 2R.